What if the biggest secret to building wealth is not finding the next explosive stocks? What if it's not making money quickly? And what if it is not having access to information that ordinary investors do not have? The truth is much simpler. The greatest investor understand one principle that most people forget the moment market get exciting. Protect your money first, then grow it. Benjamin Graham, widely regarded as the father of value investing, built his philosophy around this idea. He understood something that still matters today. You do not need to predict the future to become a successful investor. You need to avoid making decisions that can destroy your future. In this video, we are going to uncover the investing secret that rich never forget and why this simple principle can completely change the way you think about money, stock, risk, and wealth. Imagine two investors. Investor A makes 50% this year. Investor B makes only 10%. At first, investor look like the genius, but then something changed. The market crashes. Investor A loses 50% of his portfolio. Investor B loses only 10%. Suddenly, the person who looked less successful is in a much stronger position. This is the part of investing that gets ignored. People focus on how much money they can make. Great investor also ask how much can I afford to lose. That's completely different question. The average investor sees an opportunity and thinks how much can I make. The disciplined investor asks what could go wrong. The difference in thinking can determine whether someone builds wealth over decades or loses it in a single emotion decision. Benjamin Graham did not believe investing was about constantly being right. He understood that markets are unstrained, business can fail, economy can change, interest rates can move, recession can happen, and even excellent companies can become terrible investment when purchased at unreasonable prices. And that's why the first rule is simple: do not risk permanent loss just to chase temporary gains. This brings us to of Benjamin's most famous concept, the margin of safety. This may sound complicated, but it's not. Imagine you believe a business is worth $100 per share. Would you immediately pay $100? Graham philosophy would encourage you to look for a price dollar. That difference gives you cushion. That's the margin of safety. Why does it matter? Because your estimate might be wrong. The company earning might fall, the economy might weaken, competition might increase, something unexpected might happen. The margin of safety give you room for error, and this one of the most important lesson in investing. You do not need to certainly when you have is a sufficient margin of safety. Think about it outside the stock market. If you earn $5,000 a month and spend exactly $5,000, you have no margin of safety. One unexpected bill can put you into debt. But if you earn $5,000 and live on $3,500, you have a financial cushion. The same principle applies to investing. A strong financial life has room for mistakes. One of the biggest mistakes investors make is believe they can predict what happen next. They watch the news, they follow market competitors, they read prediction, they try to determine whether stock will rise tomorrow, next week, or next month. But here the problem: nobody constantly knows the future. Not you, not me, not television analyst, and not even the smarter investor on Wall Street. The market is influenced by millions of decisions: economic condition, political interest rates, technology, psychology, and countless unpredictable events. Benjamin Graham understood this. Instead of trying to predict every market move, the focus on the value discipline. That the powerful change is mindset. Instead of asking where will the market be next month, ask what am I actually buying. Instead of asking will this stock double, ask is the business worth that what I am paying for it. Instead of asking what is everyone buying, ask does the investment make sense based on its fundamental. That's investing. Trying to predict every price movement is closer to speculation. Benjamin Graham introduced one of the most memorable ideas in investing, Mr. Market. Imagine that you own a piece of business. Every day a stranger business partner come to your door. Sometime he offer to buy your share for an incredibly high price. Other days he become terrible or offer you ridiculously exactly low price. Should you let this emotion determine what your business is worth? Of course not, but that exactly what happen in the stock market. When price rise, investors become optimistic. They believe prices will rise forever. When prices fall, fear takes over. People suddenly believe the entire financial system is collapsing. The business may not have changed nearly as much stock price, but human emotion changed dramatically. Graham lesson was simple. You do not have to follow Mr. Market. You can take a change dramatically. Graham lesson was simple. Do not follow Mr. Market. You can take advantage of him when price become irrationally high. You do not have to buy when price become irrationally low. You can investigate opportunity. The market is there to serve you, not to control you. There, this is the another secret that's separate discipline investor from emotion. Investor price is what you pay, value is what you get. A stock trading at $10 is not atomically cheap. A stock trading at $500 is not atomically expensive. The number on the screen tells you the price, it does not tell you the. But when you discover house needs $300,000 in repairs, suddenly $200,000 does not look cheap. The same principle applies to business. You have to understand what you are actually buying. How does the company makes money? Does it have sustained earning? Does it carry too much debit? Does it generate cash? Does it have a durable competitive position? And most importantly, are you paying reasonable price for the value you're receiving? This is why successfully investing requires patience. You are not shopping for the most exciting stock. You are searching for a sensible investment at the sensible price. Here where investing becomes incredibly powerful. You do not necessarily need extraordinary returns. You need time. Imagine investing consistently and allowing your return to remain invested. Your money become earning return. Those returning begin earning returns, and eventually your money starting working alongside you. The compounding, this is why patience is such a powerful financial advantage. But there is a problem. Humans are not naturally patient. He want result now. He see someone make money from a stock and immediately want the same result. We see cryptocurrency rise and want jump in. We see a new investment trend and feel like we are missing out. And this create a dangerous cycle. By watch, panic, sale, repeat. Long-term wealth often requires doing the impossible. By carefully test discipline, ignore unnecessary noise, and give good investment time to work. The goal is not become rich overnight. The goal is become financially stronger year after year. There another lesson that get overlooked before investing money is investing in your ability to make good decisions. Learn how business work, understand basic financial statement, learn about risk, understand your own behavior, because your biggest financial enemy may not be inflation, it may not be the stock market, may be your emotions. Fear can make you sell at the worst possible moment. Greed can make you buy at the highest possible price. Emotion can make you abandon good strategy. Overconfidence can make you the risk you do not understand. The greatest investors are not necessarily people who know everything. They people who understand what they do not know. They actually humility, and it's incredibly valuable. Things about every major investment trend. At some point people become excited. Everyone is talking about it. Everyone know someone how made money. Social media is full of success stories. Suddenly now investing feel like a mistake. That's when the crowd become dangerous. When everyone is buying because everyone else buying, price can become disconnected from reality. Benjamin Graham is philosophy, everyone else, it mean asking, does this investment can make sense? If the answer is yes, you can invest. If the answer is no, you can walk away. You do not have to participate in every opportunity. And the powerful realizations, you do not become wealthy by owning everything. You become wealthy by making a relatively small number of intelligent decisions and avoiding catastrophic ones. Let's bring everything together. The investment secret the rich never forget is not a magic stroke. It is not a secret trading. It's indicator. It is not cryptocurrency prediction. It's in mindset. Protectful capital because money you lose have to be earned again. If you lose 50% of your portfolio, you do not need a 50% gain to recover. You need a 100% gain. That why avoiding unnecessary loss matters so much. Compound. This is why Graham philosophy remains relevant. Market change, technology change, compound the diagrams philosophy relevant. Market technology change, company change, but human emotion do not change very much. Fear, greed, emotions, overconfidence, these emotions existed decade ago, they exist today, and they probably exist tomorrow. So what is the investing secret rich people never forget? It's simply make money. It's make intelligent financial decision rapidly while avoiding mistakes can permanently damage your wealth. That the real game. Do not chase every opportunity. Do not confuse price with value. Do not let Mr. Market control your emotion. Do not try to predict everything. Build margin of safety. Think independently. Invest consistently and give compounding enough time to work. Benjamin Graham philosophy was not about become rich tomorrow. It was about developing a system that could survive tomorrow, and that the much more powerful idea because anyone can get lucky once. Anyone can make money on trade. Anyone can buy the right stock in the right time. But building lasting wealth requires something much harder: discipline, patience, knowledge, and the ability to say no when everyone else is saying yes. So next time you look at investing opportunity, do not ask how rich can this make me. Ask a better question: how safely can I build wealth from here? Because the greatest investors do not spend their lives chasing wealth. They build systems. They allow wealth to compound and they protect those systems from their own worst decision. That is the investing secret, and it's one worth remembering.